Well, I got to say, the company that explains the Facebook result, I think you got to look at Apple on two fronts. First, the warning on the headwinds on ad targeting directly aimed at Apple's changes in the platform, and also the spending, new tech, new talent. That's the arms race coming with Apple around AR and VR. So very interesting, given obviously a strong quarter, but investors are paying attention to those two threats. And I think, Apple's behind both of them.
Is it a buying opportunity like it has been in the past, Josh, whenever Facebook warns of headwinds coming that's going to pressure its business and puts out a quarter like it just did?
So I think with Facebook, what's interesting is they don't really have an issue fundamentally. They're still making a ton of money. The issue is more on optics and the overhang for what people think might eventually happen on the regulatory front. The problem with that as a bear thesis is that that's always been the case. We've been talking about that, more regulation for years now, like since before the 2016 election. That's been a supposed overhang. So if you're somebody that missed Facebook and you want to get in, typically after an earnings report, when you've had a sell-off, that's been the way to do it. That being said, though, one last word of caution. At the end of the day, here's what's inescapable. 90% of Facebook's revenues are advertising. 50% come from the United States, 25% come from Europe. Like, those are the numbers, and that's not changing. Don't tell me about augmented reality. Those are the actual numbers. And Facebook, by the way, unlike Tesla, topped on like August 1st. Facebook is like 7 months since its last record high. Tesla being down roughly the same amount after the close. Keep in mind, Tesla was $650 a month ago. So, like, these are two very different setups for investors. And that's what the way I would phrase it.
Shepard Smith here. Thanks for watching CNBC on YouTube.